You know, with thousands of stocks out there, the biggest challenge for any investor is just knowing where to even begin looking. We're all hunting for that next big winner, but what if I told you the secret isn't in the stock itself, but in the neighborhood it lives in?
It really is the million-dollar question, isn't it? We all want to find those top-performing stocks. But honestly, analyzing company after company can feel like searching for a needle in a haystack. Well, today, we're going to flip that entire process on its head.
So here's the big secret. The first step is to just stop looking at individual stocks. Yeah, I know that sounds completely backward, but trust me, this one little shift in perspective is an absolute game changer.
And miss right here, this is the core principle that guides everything we're about to do. Just think about it for a second. A fantastic company in a failing industry is always fighting an uphill battle. But even a pretty average company in a booming industry gets a massive tailwind pushing it forward. So if we can find the strongest industries first, we've already stacked the odds way in our favor.
Okay, so how do we actually find these leading industries? Well, this isn't guesswork. We use a powerful method that ranks them based on two critical factors. It's all about measuring the real-time health of an entire sector, and it really boils down to two key ideas: momentum and breadth.
First up, we have momentum. This is pretty simple. It's just how fast an industry's prices are moving up. You can think of it like a car's horsepower. An industry with high momentum is accelerating hard, and that's exactly the kind of raw power we want to see.
But you know, horsepower by itself isn't the whole story. We also need breadth. This measures how many stocks within that industry are actually participating in the rally. Is it just one or two superstar stocks dragging the average up? Or is it a genuine, broad-based move? That rising tide lifting all the boats? That's always a much healthier sign.
And this slide shows you exactly what I'm talking about. On the left, you've got a healthy, high-probability trend, where pretty much everyone's on board. But on the right, that trend is fragile. It's totally dependent on just a couple of leaders. If they start to falter, the whole thing can fall apart. We are always looking for the situation you see on the left.
All right, so with that framework in mind, let's dive right into our #1 ranked industry right now: aluminum. The defining characteristic here is its incredible breadth. This is the perfect example of that healthy, broad-based strength we were just talking about.
Now, take a look at the data on this slide, and let's focus on that 3 combo 10 column. That score basically measures recent price acceleration. Now look at the numbers. National Aluminum at 0.252, Hyundalco at 0.116, Arfin at 0.178. But the key thing to see here isn't one single number. It's that we're seeing strong, positive scores all over the place. This is not one stock carrying the team. The entire industry is moving together.
So, here's the crucial takeaway. When strength is this widespread, it usually means one thing. The big money, the institutional investors are actively buying into this sector. And for us, the trading implication is huge. It means when a stock in this industry breaks out to new highs, it has a much higher probability of actually following through and continuing its run. This sector should absolutely be on your primary watch list.
Okay, let's keep it moving. Coming in at #2, we have aquaculture. Now, if aluminum was all about that broad, steady strength, aquaculture is about something else entirely. It's about pure, unadulterated speed. This is our fast mover.
Just look at that number on the screen. That's the short-term momentum score for Apex, one of the leading stocks in this space. A score of 0.289 means we are seeing incredibly high acceleration. This isn't just an uptrend. This is an industry that has slammed its foot on the gas pedal.
The key here is understanding that acceleration. It's what we call a rising delta. The speed is actually increasing. Now, this kind of setup is perfect for quick swing trades, but it also comes with a big warning. You have to avoid chasing moves that have already gone vertical. The smarter play in a high-speed environment like this is to be patient, wait for a small pullback or consolidation, and then look for your entry.
And rounding out our top 3 today, we have the private bank sector. This one has a completely different personality from the first two. It's not about explosive moves or insane speed. No, this is our consistent, steady performer.
The data in this table tells a story of stability. Look at stocks like Karur Vysya Bank or Federal Bank. You're not seeing one single massive momentum score. Instead, notice how the scores are consistently positive across all 3 time windows: the 3-day, the 10-day, and the 20-day. That is the classic signature of a steady, low volatility, grinding uptrend.
So what does this mean for your trading strategy? Well, this sector is not where you look for fast money. Instead, it's a source of reliable trend continuation patterns. The moves are slower, they're less volatile, which makes it absolutely ideal for traders who prefer stability and just want to ride a consistent, established trend without all the drama.
So let's put this all together now, because the real power of this analysis isn't just about finding what's strong. It's about understanding the character of that strength. This lets you match your personal trading style to the specific personality of the industry you're looking at.
So here it is, our final ranking for today. At number 1, we have aluminum, our highest probability play because of its incredible breadth. At number 2, aquaculture, the place to go if you're looking for the fastest swing trades. And at number 3, private banks, perfect for slower, more stable trend following.
If you only take one single thing away from this whole explainer, please let it be this. While momentum is exciting and gets all the headlines, it's the breadth that gives a trend its real staying power. Stronger breadth across an industry almost always means a higher probability that the move is going to continue.
And we're not stopping here. In our next analysis, we're going to continue down the ranking list and tackle the next group of industries, including auto ancillaries, automobiles, and bearings. There are some really interesting things happening in those sectors that you are not going to want to miss.
And that brings us to the end. I want to leave you with this one question to think about. Now that you have a framework for identifying the market's strongest areas and for understanding their unique character, how will you change your own investment process?